A fractal arrow, which signals a potential trading opportunity, appears on a specific candle only after two subsequent candles have closed, confirming the pattern. The strategy is designed to capitalize on these fractal signals by entering a trade once the market shows clear momentum. For a buy entry, the trader waits until the price of a candle closes above the high of the candle, marked by the fractal arrow. This ensures that the breakout is genuine and not a false signal, providing a more reliable entry point for the trade. The fractal breakout strategy is particularly useful for traders looking to identify trend reversals or continuations, with a focus on timing their entries for maximum effectiveness. By using this method, traders aim to capture significant price movements following the breakout, reducing the risk of premature entry and increasing the chances of success in volatile markets. Does the fractal breakout trading strategy truly work? Is it a reliable indicator for long-term trading success? And more importantly, can it consistently generate profits in forex and stock market trading? Many traders, especially beginners, grapple with these questions. The truth is, while the fractal indicator can be a powerful tool, it is often misused, leading to poor win rates. Most traders don't realize that using the fractal indicator incorrectly can severely diminish its effectiveness, making it difficult to achieve profitable outcomes. As you may already know, the traditional use of the fractal indicator often fails because it generates too many entry signals in a short amount of time, leading to confusion and missed opportunities. However, the fractal trading strategy I'm about to share with you is different. It's more refined and much more effective. I'll walk you through exactly how to use it, step by step, to avoid the common mistakes that many traders make. If you're new to this, I recommend subscribing to the Trader DNA channel and hitting the notification bell so you don't miss out on valuable trading insights. You don't want to risk your money on strategies that simply don't work. The fractal strategy I'm presenting today is far superior to the one commonly used by novice traders, which you might already be familiar with. In the old strategy, traders would enter trades the moment a fractal arrow appeared, assuming it was the best signal for market direction. But that approach is flawed. In this new strategy, we wait for confirmation. Instead of rushing into trades as soon as the fractal arrow forms, we wait for the price to break above or below the candle where the fractal arrow appeared. This simple yet powerful adjustment makes all the difference and significantly improves your chances of success. Let me explain how this works in detail. This fractal strategy operates primarily as a breakout trading approach based on fractal patterns. A fractal arrow, which signals a potential trading opportunity, appears on a specific candle only after two subsequent candles have closed, confirming the pattern. The strategy is designed to capitalize on these fractal signals by entering a trade once the market shows clear momentum. For a buy entry, the trader waits until the price of a candle closes above the high of the candle, marked by the fractal arrow. This ensures that the breakout is genuine and not a false signal, providing a more reliable entry point for the trade. The fractal breakout strategy is particularly useful for traders looking to identify trend reversals or continuations, with a focus on timing their entries for maximum effectiveness. By using this method, traders aim to capture significant price movements following the breakout, reducing the risk of premature entry and increasing the chances of success in volatile markets. The strategy for selling is straightforward. After the down arrow is formed, the trader waits for a candle to close below the low of the candle that contains the fractal arrow. This provides confirmation that the price is likely to continue moving downward, thus reducing the risk of false signals. Once the price closes below this key level, the sell entry is triggered at the closing price of that candle. This simple yet effective approach allows traders to take advantage of bearish market movements with clear, rules-based entry points. By focusing on the closing price as confirmation, the strategy helps avoid entering a trade prematurely during market noise or temporary fluctuations. It is designed to enhance precision and decision-making, ensuring that traders only enter the market when the downward breakout is confirmed, which can lead to more profitable outcomes in trending markets. Let's break this down with two clear examples to illustrate how this strategy works. In the first scenario, an up arrow appears on the chart, signaling a potential upward movement. However, instead of entering the trade immediately, we wait for the price to confirm the signal. The confirmation comes when the price crosses above and closes higher than the entire candle where the up arrow appeared. Your entry point, therefore, isn't when the fractal arrow shows up, but rather at the closing price of the first candle that crosses and closes above the fractal candle. This adds a layer of confirmation, reducing the chances of false signals. In the second example, we apply the same principle in a bearish context. Here, a down arrow appears, indicating a potential downward movement. But again, rather than rushing into the trade, we wait for confirmation. The price must cross below and close lower than the entire candle where the down fractal arrow appeared. Your entry is then at the closing price of the first candle that crosses and closes below the fractal candle. By waiting for this crucial confirmation, you significantly improve the accuracy of your trades and avoid entering positions based on premature signals. This method brings structure to the use of fractal indicators, making the strategy more reliable. To put it simply, in a buy setup, the price is essentially breaking above a key resistance level, a high point that previously caused the price to move downward. When a price level leads to a decline, it typically indicates that selling pressure is concentrated around that area, as sellers are actively pushing the market lower. However, if the price manages to break through this level, it signals a shift in market dynamics. The sellers who were dominating around that resistance may exit their positions, resulting in a reduction of selling pressure. This, in turn, paves the way for increased buying activity, as buyers take advantage of the breakout and push the price higher. The same principle applies to a short setup, but in reverse. Understanding how buyers and sellers interact at critical price levels is crucial for success in trading. These dynamics play a major role in shaping market movements. To make the fractal breakout strategy more effective, we can use a 200-period moving average and a 14-period moving average to identify long-term and short-term trends. The 200-period moving average is commonly used in trend-following strategies. If the price is above this moving average, it suggests the market is in an uptrend, while a price below it indicates a downtrend. This simple filter helps you trade in the same direction as the overall trend, increasing your chances of success. Now, let's simplify the modified fractal breakout strategy. If the price is above the 200-period moving average, it means the market is generally bullish, uptrend. The best time to enter a trade is when the price resumes its upward trend after a temporary dip below the 14-period moving average. During this dip, if an up fractal arrow appears on a candle, you should wait for confirmation. Watch for the price to break back above the 14-period moving average and also break above the high of the candle, where the up fractal arrow appeared. When the price closes above this high point, that's your signal to enter a buy trade. To manage risk, place a stop loss just below the 14-period moving average. This way, if the trade goes against you, your losses are limited. By combining the 200-period moving average, the 14-period moving average, and fractal breakout signals, you add extra confirmation to the strategy, filtering out trades that don't align with the broader market trend. This improves trade accuracy and reduces the chance of false breakouts. On the other hand, if the price is below the 200-period moving average, it means the market is in a downtrend, bearish. The best time to enter is when the price resumes the downward trend after a brief rise above the 14-period moving average. During this rise, if a down fractal arrow appears on a candle, you should wait for confirmation. Watch for the price to break back below the 14-period moving average and also break below the low of the candle, where the down fractal arrow appeared. When the price closes below this low point, that's your signal to enter a sell trade. After thoroughly testing this fractal breakout trading strategy, I have made some insightful observations that distinguish it from the traditional fractal trading methods commonly used by novice and amateur traders. This fractal breakout strategy is unlike the typical fractal trading strategies commonly used by novice and amateur traders. This approach is more effective and provides reliable entry signals. However, since it still relies on the fractal indicator, you may notice it generates a high volume of entry signals within a short time frame. What I appreciate most about this strategy, especially compared to the commonly used methods by novice and amateur traders, is that it doesn't try to predict the end of a pullback multiple times in succession. This means you won't be overwhelmed with unnecessary entry signals when the price clearly isn't poised to move in your favor. This strategy is very accurate if you follow the trading rules that we discussed earlier. If these rules are not clearly met in the market, you should not enter the market. You'll find that this strategy is easy to implement on your own because it's quite simple. In this video, I've also included a template that you can upload to your chart. It will automatically add all the indicators for you, so you don't have to worry about a thing. Just grab the download link in the description. As always, if you learned something new, or if you want more videos more often, Make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.